Good evening to one and all present here. We have with us our CEO and founder, Dr. Mohit Batra, in today's Q&A session. Feel free to drop in any queries you have on your investments using the Q&A box available just below the video. Over to you, Mr. Mohit.
Thanks a lot, Jason. Very good evening to all of you. It's been a long time that I've come in front of you. I hope all of you are doing well. MarketsMojo is entering into a new phase starting next week. It is not an announcement that I'm going to do today, but it is something that I'm announcing so that you can be present on the webinar event that we'll conduct next Friday. That's a very big launch that we're doing next Friday for our Mojo Professional and for our Infinity members. It is an added feature that we are launching, but it is one of the biggest initiatives that I would say we would have done since the launch of Infinity. So that is something that we will be doing next Friday. So I wish and hope that all of you are there to see the benefit that you would get from that particular feature coming Friday. Moving on, I think we've covered budget pretty extensively, both in front of you as well as with external media. And you would have noticed and you would have witnessed that I think a lot of people have seen the budget videos that we've had. The budget is extremely forward-looking. Also, we had predicted before the budget also that it would be typically a non-event, not a negative event, but a non-event. And actually, it turned out to be a non-event because most of the things that are events are something that we can anticipate and see with our open eyes out there. This budget has various hidden agendas that will take India to the next level of growth. It is a very, very strong budget and foundation for the next level of growth. And I can also tell you that in all probabilities, I was hoping and I was thinking that this budget may be very populist, considering that we have elections coming up in a year's time. And I think it is a fearless budget, primarily because I think the way the government is going, they're doing the right things. And they personally feel that this is not which will decide the victory in the next election. So it has been a very fundamentally strong budget towards growth. It has been a fundamentally strong budget towards the manufacturing growth as well as from the tech side. A lot of emphasis has come on knowledge-based services and IT services. So both on the service and manufacturing side, it's a very, very balanced budget, whether it is, Atmanirbhar Bharat, whether it is on the IT and the knowledge services, both the sides have been equally powerfully put out there. Deficit coming under control. Further projections say that it will go below 5% marker, which is from 2027 onwards, is a direction that the budget numbers are already showing. The decline numbers over the last couple of years on the fiscal deficit to GDP ratios. So you are seeing a trend which is not just a projected trend, but it is inbuilt in the current numbers, and the trend is only going to improve moving forward. There is a short hue and cry here and there because of whatever is happening on the Adani Enterprises. And obviously, if you see more so Nifty getting affected than Sensex because it's a Nifty company, there is a lot of chaos in the market. There's also a parallel collateral damage that may happen on various banks where the collaterals are of the group. We are watching all of that very closely. In fact, we may decide to get out of certain banks. We are looking at all of those factors in terms of wherever there is a possible impact of this particular episode that can happen. So we are closely watching all of that. But today we will do a full-fledged Q&A session. We'll try and pick up as many questions as possible. So start dropping in your questions and I'm here to help you in any ways.
Okay. Starting off with this first question, this is by Abhinesh. Good evening. I have two questions. I have an aggressive model portfolio, and when I add investment, the balancing between the stocks is disturbed. Should I worry about this?
No, you should not worry about this. The balancing works in the longer term. Every time that you add investment, overall, the balancing will auto happen. Whenever there's a stock that will come out for sale, the auto balancing keeps happening. So you don't need to worry about the new investment suggestions that you get as soon as you do the AI.
Okay, he says he has a profile of 10 lakhs and plans to add 30% every 4 months. Is that fine?
Yeah, that's fine. I think if you look at where we are today in terms of, if you look at India's, the Indian market PE, if you look at, we are undervalued today. vis-a-vis our last 5-year, average PEs. So if you look at today in the market, if you see we are BSE 500, for example, over the last 1 year period is down by 1%, right? So I think the bottom fishing is happening. I think that the market is bottoming out very strongly. I personally feel that barring the next 3 months, which may be a little bit of a problem because of, for example, March 22nd, another Fed meeting is happening. They might increase the rates by another 25 basis point as what we are projecting. We are looking at RBI to increase on the 8th of this month, another 25 bips. They may be forced to increase another 25 bips in the next policy because obviously they don't want to go and put rupee under pressure. So considering all those factors, I think your allocation strategy, if you're looking at allocating further funds, should not be beyond the 3-month window. So that's how you need to do, unless it's a liquidity issue, is then you don't have the money, so then you can prolong it. But I think over the next 3 months you should be fully invested.
Okay, and the second part of the question was that he's planning to diversify his investments as model portfolio in Nifty 50 ETF, Nasdaq ETF, gold, silver, fixed deposits. Kindly advise what percentage I could maintain, I believe I'm an aggressive investor.
If you are an aggressive investor, then why would you invest in the index? My simple question out there, you should go with managed funds and active funds. Maybe you can do a gold allocation as well, but beyond that, I don't see where any further opportunities out there. So I would typically say that if I were in your place, I would do around 60 to 70% in equity, considering where we are today, and that's the reason I'm saying that up to 70% I will go into equity, and maybe another 10-15% I would go into gold. I don't have a favorable view on gold as of right now. I think it's completely overcasted with the current valuations. So I would not go more than 10-15%, and maybe I can even go up to 80-85% on equities. We are very strong on our view in terms of where the markets can go from here onwards, or maybe in the next 3 months.
Okay, next question by Manjunatha. Hello, Dr. Mohit. Please let us know when will the PMS option be enabled so that I can hand over the responsibility of buy and sell to your team and focus on my primary job.
Sir, we are following up with the regulators on a day-to-day basis. We don't know when the license will get granted. Regulators typically don't get back to you very easily. So our outer limit is May, June, but it may happen before that. I think it will happen before that. We are all ready to implement the PMS scheme. In fact, our term sheets are ready, our softwares are getting aligned. So we'll be able to onboard without any delay as soon as the license comes in. But these are factors that are external to our control. I personally feel that it should happen in the next 3 odd months.
Okay, Mohit, and I think the most asked question today, this one by Kirit Kumar, your view on the Adani episode and its likely effect on the market. It has taken a huge biting on the Nifty indices.
So, see, personally speaking, and as you know, as MarketsMojo, we have never recommended Adani to our investors. We personally, when we looked at, our AI looked at the numbers, we did not pick up Adani, any of the Adani companies in any of our portfolios or any of the Mojo stocks or any of the recommendations that we have taken up. So we have been actually beaten down a lot, barring the last 1 week since this episode happened. But various of you have asked us questions that why aren't you recommending Adani Group as an investment opportunity? And we've always said that it has not come in our buying, primarily because my system tells me that it is not the group that should be coming in buying as of right now. So that is something that has happened. I personally don't have a view in terms of where the group is. I just feel that the numbers are a little confusing. The numbers are not looking right to us. And that is the reason we've stayed away from that group, despite the unparalleled returns that they've given to the investors, barring the last 1 week. I personally feel that the impact of Adani Group will not be long-lived. I think, if you look at even today, and that is primarily because yesterday they were, the shorting was banned on the FNO options for the group. So it went down 35% Adani Enterprises today, recovered back, and I think it closed around 1% or 1.25% up today. So I think the erosion of the value that has happened across the group, which is on an average of 50 to 60% now across various companies within the group, is a leveling up of what the customers are expecting. But the surprising thing is, I can tell you that around 3 years back, and this is maybe a story for all of you to know, around 3 years back, we had a very similar case with Rajesh Exports. Rajesh Exports was a large cap with a 38,000 crore market cap. And when we looked at that company, we also figured one thing, that the company is so big, mutual funds are flushed with funds, but none of the domestic fund managers were buying that. The stock had a mutual fund holding of around 1%. If the group is so large, if the value is so much value that is being created by the group to the shareholders, why is that this group today, or maybe Rajesh Exports at that point in time, has 1% holding? If you look at any of the other large caps, right, you will have on an average of 6, 7, 8, 10% holding by the institutions. So that this group has around 1% holding, 1% holding. So it tells you that there is something that is going on where the markets, the experts at large are not buying this company, and maybe the retail participation is what is driving this particular company. So it is not I think, most of the smarter mutual funds have stayed out of the game. There are some mutual funds who bought it, but at 1% institutional holding of such a large, organization, one of the largest that we have in the country today, you still don't get the comfort, or it's not giving you the comfort. So I personally feel that it will remain in this particular zone, or maybe go down another 10, 15, 20% from here. And they'll have to really do a lot of work on corporate governance, on displaying their numbers, their revenue numbers, giving clarity to the shareholders. And I think as a large group, they will do that. It has been a very rapid fire story of growth. And I think somewhere they'll have to substantiate that story and come out with a much more clearer view for the investors. Overall, group going further down from here, 10, 15, 20%, I don't think so. There'll be any market impact to that. Market has already taken the impact. What happened? The overall group is down by around 50%. What is the impact on the market? Right? What is the impact on the index? So it is the impact of one organization, which I think is very close in terms of the shareholding pattern. The impact is not that much. So I don't see any big impact on the indices. I don't see any big impact on any of the other companies. As I said, you'll have to see in all of this financials opening up, what is the place where the collateral damage can happen, because they've even returned the money, or they're planning to return the 20,000 crores out there, which was a part debt financing and part growth financing. So we'll have to see really how do they fund their debt, and we'll have to figure out where all other debt pieces lying, and can we stay away from that as a strategy for us.
Okay, I'll continue with some of the questions on the Adani Group. Vijay has asked that, do you think that, do you have any opinion until when can we expect the impact of Adani Group on banks?
I think over the next 6 months, things will become more clearer. So if you give 3 to 6 months time, things will become more clearer. I personally feel that they will come out with another issue. There is no other opportunity. They will have to come out with another issue. If you personally ask me, the return of the money was very strategic, because they had not dropped the issue price. And when the group has cracked so much, they had to drop it. So they will stabilize the group. They will stabilize their story. They will come back to the market and they will raise it. And I think for a group of that size, if they're able to stabilize their story, they should be able to pick up money. So I think in 3 to 6 months time, we would be clear.
Okay, this question asked by Frank. Could you explain what exactly are junk bonds? Adani, some of the bonds have been classified as junk bonds. Do you have any opinion on this?
Yeah, junk bonds are typically where, the yield is wiped out for the investors. So some of the bonds which are known as junk bonds is where the redemption value is almost next to zero, or maybe I will say 25 cents to $1 or 30 cents to $1. So the market anticipation is that they will not be able to pay back, and hence they get categorized under a junk bond category. The residual value of junk bond, over a period of time has been 25 cents to $1, or maybe 30, 40 cents to $1, depending on how much is the residual value. But it is not the principal. The principal erosion typically happens in the junk bond category.
Okay, Shrihari asked that Mohitji, whether other peer group companies to Adani's have advantage if we buy them?
No, I don't think so. I think it's a very it's let's not take this as an opportunistic story. It is too soon, too fast. So I personally feel that किसी की खराब न्यूज़ अपनी अच्छी न्यूज़ नहीं होती है, right? So I personally feel that as soon as we follow that philosophy, that if the loss of this, because the loss is not loss of revenue for them, the loss is not loss of opportunities for them, the loss is not loss of their clients are running away from there. So that is not going to result in a gain for somebody else. It's a market loss that they are facing, and they are up against the wall on a specific problem. And I think they are smart enough to come out of it. It's a large group. So if they can recover their story, then that's great. But I don't see that there are opportunities of buying other counters because this counter is failing. It's not a market share distribution that is happening out here.
Okay, Mohit, I can see a lot of questions coming by investors. They've asked that a lot of stocks have recently entered and exited the system very quickly in the Mojo list. Is there any problem with this particular thing?
No, there is no problem. This is something that even we are evaluating. The volatility in the market is making the Mojo stocks enter and exit very fast. And in fact, it is against our philosophy. So starting next week, we are putting a solution to that to make sure that we put a stock into a cold storage before we declare into a Mojo stock to try and see the trend, whether it is coming out, and only declare when it sustains at least a couple of weeks in our list before we declare it as a Mojo stock. So it's something that we are, because excess volatility in the market is making the stock go in very fast and come out very fast. And we are putting a 15-day cold storage period to make sure that we observe the stocks. Now, there is another interesting trend. So, for all my model portfolio users who are in negative, for all the Infinity members also who may be in negative, I must tell you that we are now reaching the last leg of IP improvement. And I'll tell you the last leg, which is the most important leg, which is quite related to your question, sir. And that is the reason I'm finding the opportunity to pick up your question and tell you what we are doing. So there is a observation that we have done. So we have implemented a PAS score, right, which is a different score for all the portfolios. So it runs on a different score. So that's one thing that we did. We implemented fall from high. So that is another thing. It is a stop loss that we've implemented in a way which depends differently on different portfolios. We've also implemented the whole, we've removed the technical weight so that we can understand that this is not in volatility, the technicals can move very fast so that we can reduce the churn. We've also started sequential selling so that there is no impact cost. So that, last year, the impact cost was as high as 10 to 12%. So that 10 to 12% impact, people who are now getting sell calls or buy calls, you will see that impact is not there. So that is something that we've rectified. We've also started doing active profit booking. So all of this is the big initiative with which you're not seeing me more in the screen is because I was doing all of that on the back screen to try and figure out all of these. There is one interesting trend that we have figured out, that when we buy a stock, either it goes up or goes down, right? If it goes down beyond 10-15%, mostly, I would say over 70 to 75% of the time that stock remains down or hardly recovers. All of this happens in the first 10-15 days. Right? I'm talking about the first 10-15 days of a stock journey. This is a very interesting trend, and this will help you even look at Mojo stocks and buy it in a reasonable way, right? So basically what we've figured out is that if the stock holds in the positive category in the first 10 to 15 days, it zooms. If the stock doesn't hold the ground in the first 10-15 days, it zooms in the other direction. Now, what classically we've been doing is that as soon as the stock comes, we buy it in the model portfolios, in the Infinity portfolios, right? You may also get excited when a Mojo stock comes out, you say, buy, let's buy this out. What it is clearly telling us is that if you wait for 10-15 days, then you actually get the right trend whether this is the stock you need to buy or not, and your success rate typically goes up a lot. If you remember in the multi-bagger, we used to catch that buy a stock after 1 month, buy a stock after 2 months. And I think we've been very stupid in not following that philosophy on the model portfolio side and on the Infinity side, because a stock comes and we say that, okay, this is fundamentally good stock, but what we are learning out here is that there are certain times where the market knows so much more than just fundamentally strong, that is a parameter that cannot get caught by just an algorithm, by just data science. So what we are now as a last phase implementing is that a cold freezer concept, where if a stock gets into my master list, I will hold that stock for 15 days just to understand which way it is going. If in 15 days it is cracking, I'm not going to buy it. If in 15 days it shows me an upward trend, I'm going to put it on the buy list. So that is a very critical thing that we're doing now. And this thing is getting implemented as early as Monday morning. In fact, we have an in and out process today where Sunil is doing it right now and implementing it today onwards. But from Monday morning, you will see that impact, that we will wait for 10-15 days, look at the trend of the stock, because it is telling us very clearly that जो stock 10-15 दिन चल जाता है वो बहुत चलता है, जो stock 10-15 दिन नहीं चलता है वो नहीं चलता है, right? So please follow this. I'm giving you a very lethal weapon to resolve a lot of problems for my Mojo professional and Infinity investors who are taking our advice directly on the stock platform, to make sure that when you're buying a Mojo stock, hold on for 10-15 days when it becomes a Mojo stock and then do it. What we are going to do anyways is that we will make the Mojo stock only after 10-15 days so that you don't fall for it, right? Sometimes you have नया stock आया यार, आज ऊपर है तो ले लेते हैं इसको, right? So what we are going to do from our side is that we are anyways going to implement that 10-15 days wait period. It will become a Mojo stock, but not on the system. We will observe it for 10-15 days. If the price trend is positive, we'll make it a Mojo stock. If the price trend is negative, we will wait till the time the price trend turns positive. If it doesn't turn positive, we will not declare that stock as a Mojo stock, even if it is 90 rated out of 100. Right? So it's a very, 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 very critical thing that we are doing out here, which I think you all must take a note of. I hope this would help you, because this is the most critical thing that I'm going to speak on this particular webinar today.
Okay. Moving to this next request, this is by Bhargavi. She's saying, Mohit sir, we're waiting for the multi-bagger session. When can we have that?
I was absorbed in all of these changes so that the next time I come in front of you on multi-bagger, I would do some justice to it. The week after next is when we will start with the multi-baggers. Jason, please make a note. We will give you a date well in advance, but we will start the multi-bagger the week after next.
Okay, moving to this next question by Mr. Manohar. Around 60% of my portfolio has mid and small cap companies. In the last 1 year, these stocks have got impacted badly.
Yes.
Is it worth holding those stocks and wait, or is it better to sell them off and invest in large cap?
Manohar, this is the time that is there to hold. In fact, if you take if you take and do allocation to large caps today, it may be counterintuitive to you. Our house call is typically mid and small will move much faster in this particular calendar year than the large cap. So I would strongly, and you would see in the last 3-4 days what is happening. You see where the index is going and where the mid and small caps are going. So I would say you've taken the pain, you bore the pain for such a long time, wait for a little while, because the journey of small and mid cap is about to start in a very big way.
Okay, this next question, this is by Kevin. Good evening. As for the backtesting done before Infinity launch, the 1 year returns were around 30 to 35%. But why is the outcome low after the 1 year of launch?
So actually the returns were much higher than that, Kevin, to frankly admit out there. Now, obviously the returns are lower because there is a lot of the returns are never linear. When I give you a return number, let's assume I say 30% CAGR. The 30% CAGR doesn't mean that it will be 30% every year, right? It means that over a 6-year period, the overall portfolio gave a 30% CAGR compounded annual growth rate, right? So that is how it is done. Now, even if you look at the breakup of that 30% or 35% that you're talking about, we had done negative in 1 year, we had done 10% in 1 year, we had done 60% in the other year, we had done 70% in the other year. So the story of 30-35% is a 5-year story. In 1 year, you may be down 10% or you may be there at 10% up, but in next year, you then do the catch up. So that is how the markets are non-linear. That is how the catch up happens. So I'm personally I don't think so I'm worried about the number that we had quoted out there, because I think we should be able to achieve it despite 1 year of, a little drawback that we've had in terms of what all has happened over the last 1 year.
Okay, I think Mohit, you spoke about the cold storage. So a lot of investors are saying that, do you have any of the shares which you can show from the cold storage waiting room?
मैं आपके पैसे बचाने की बात कर रहा हूँ, आप मुझे यू आर टेलिंग मी टू गिव यू द नेम्स सो दैट यू कैन इन्वेस्ट बिफोर आई कैन फाइनलाइज दैट. आई एम नॉट गोइंग टू गिव यू दोज कोल्ड स्टोरेज नेम्स बिकॉज trust me, it is only to try and increase your wealth. It is everything, every step that we do is only to make sure that the choices that we give you to invest are better over a period of time. We relentlessly work towards making sure that where are we lacking, right? And we poke ourselves so much on a day-to-day basis to figure out, can we do anything better out there? So it is for your betterment. If I tell you that betterment is going to go away, so how can I say something and do something which is for your good and still give you the animation to? I'm not going to let you shoot yourself in the foot.
Okay. Also, some of the investors have asked that, if you wait for 10 days and keep the stocks in the cold storage, what if the price goes down later after it's been introduced in the Mojo stock list? Will that be taken care of?
Yeah, so see, the thing that happens is that I can only do so much, right? So if I'm waiting for, say, a 10-15 day period and there's a clear trend that has come, what our system is telling us is that if you're able to catch the trend in the first 10-15 days, your success typically goes up very high, right? It is not still 100%. It is not a bulletproof formula out there. So let me just tell you that I may still fail on certain stocks even after waiting for 10-15 days. But if I was failing on maybe 10 stocks, I'll fail on 2 stocks. It is as good as that, right? So you will still go down. It's a stock market. It's stocks. It could still go down. But our job is to try and keep minimizing that error out there, right? So how do we make sure systems are better so that they take care of the errors, they understand the errors, they minimize the errors out there? This is a minimizing of the errors out there and removing maybe 8 out of 10 stocks which typically have a trend downwards and which may end downwards. How many of you have noticed, who are the long-term users of MarketsMojo Professional, that sometimes some stocks, when they come in the list, they only go up, and sometimes the stocks only goes down? Right? Infinity members, if they are here, or maybe some of the model portfolio members, Honda India, for example. The day we bought, from that day, the stock has only taken a downtrend. Right? There are certain stocks, the day we bought, the stock has only taken a upward trend. Mahindra CI, for example. Right? So it's only taken an upward trend. So there are clear trends that the stock is telling you. So then why not wait and see that? And there are certain stocks which will go down and then come up also. There are certain stocks that will come up and go down. Those are cases that will always remain. So there is no holy grail to that, but this is only about improving your chances of success and decreasing your chances of failure as we go forward.
Okay, moving to this next question, actually the last question from the Adani group. Deepak has asked that, can you advise if we can enter any of these stocks at the current level or like a bottom fishing strategy?
No, I would strongly, Deepak, recommend that we have a sell to a strong sell to a hold. I think these are the only 3 calls that we have across Adani Group, and frankly, these have been the calls since the time we started our recommendation engine. It's never come as a buy in my system, apart from I think one company which came by for a short time. So our call is a sell and a strong sell. We don't understand the numbers. My system doesn't understand the numbers. We don't understand the story. We don't understand the corporate governance. We were the first ones, I think the only ones, who were very vehemently out there over the last 1-2 years telling you we don't recommend a buy on the stock as yet. We still hold the ground. Please do not do any bottom fishing out there. I don't think so. This is a jump down and jump up story. I really don't think so. I think the stock may remain here or crack a little further for a long time. Because the whole conflict that has come out, to justify that conflict, to repair that whole ship backwards is not a very easy thing, and I would typically not catch this at this stage.
Okay. Yeah. Moving on to this next particular question. This is by Mr. Srinivas. What's your take on assured government NCDs? What percentage can one actually put in NCDs?
So you can assure government NCDs are very safe option, and you can put in as much as you want depending on what kind of asset allocation you follow out there. But I think it is one of the most assured. It's like GSEC, so it is one of the most assured instruments to place your debt allocations in. You should not fear that at all.
Okay, Raj has asked this question. Mohit, one thing that always perplexes me is that with so many regulations, process controls, and hawk-eyed authorities, how do so many instances of corporate governance crop up so often?
Yeah.
How come these irregularities are not caught often as they happen? What I observe is that in most cases, it only comes to light when the issue has snowballed into a humongous size to seriously hurt the retail investors. Can you give your view on this?
Yeah, I agree, Raj. I think what you're saying, you are echoing even my sentiments out here. So I personally agree to what you're saying. I think we are at a stage with such strong regulations and such strong, monitoring policies that I also get perplexed and lose my trust in the system sometimes that these kind of issues are not caught, early on. But then, I look at the only thing that solaces me over a longer period of time is that I look at these promoters who are really working hard and creating businesses. So you always will have cases where miss here and there will happen. It's not an India story, it's a global story. You will have these cases across the globe, even in the most developed of the markets, whether it is US, whether it is China, you will have it everywhere. There are certain incidences like this happen. So I completely agree with you, and and I personally get surprised that how long the story could last, right? So, and because my only thing is that institutions were smart to stay away from there, right? It is a story of the retail investors, and they lose at the end of the day. So because they would firmly go on the kind of returns, the kind of vintage of the group, the size of the group, and it's not a small cap. These things happening on large cap perplexes me, but I still firmly have a lot of trust in the regulators. I can tell you that the amount of due diligence, the amount of screening that happens on a day-to-day basis is humongous. But at the same time, we are a country where we have today the second largest listed stock market in terms of sheer numbers of companies. So it can become quite onerous at times, but don't lose faith in the system, because I think that 99% of these cases are very well managed. There's always a 1% escape case that happens. I think regulators are not to be blamed out there for any of this. It's something that happens across, and it's the number that you show out there, right? So, and these are certified numbers. So what can the regulator do in this particular case when everything is certified out there? So I don't think so it's a regulatory lapse, but I think it's the clarity at which you want to grow your business, transparency and trust at which you want to grow your business. And I still don't have, I don't think so I've lost an iota of hope, because wo hota rehta hai. These kind of things keep happening, and they will keep happening till we are there.
Okay, this next particular question, this is by Mr. M. Putankar. He says, do you think, due to the Adani episode, the Indian market has lost the opportunity to be rallied or boom, which could be backed by significant rise in Nasdaq this week?
I don't think so, because of this one group, the whole story of India stories got lost, although, the largest group, but I don't think so, this one story. But you know what, I'll tell you, whenever I travel and I meet the foreign investors, and I've done that for a long time, over 15 years now, their only mistrust in India is the corporate governance. Right? A lot of promoters have gone across, raised money, not paid, defaulted. All of that has tarnished the image of this country over years. These things have minimized over the last 3-5 years. So, because there's a very strong fundamental story that is coming in. These cases are few and limited now. So, whether there is a tarnishing, the answer is yes. Whether that has resulted in the Nasdaq or the US markets going up, that is not how it is, because it's not that if you look at the institutional investors, they were anyways not investors in this group. So it's not that they were investors, very strong investors in this group, and so they were anyway staying away from the group. So I don't think so that has got any impact. Yes, I personally feel that the tarnishing effect, obviously this is a talked about subject. It has been on the cover of Bloomberg across, so it is not something that people are not across the world seeing and watching it and being perplexed by it and doubting the India story. But that's how it is. Now, the doubt of the India story would not typically deter somebody who feels that still the market is fundamentally very strong. We are, the forecast of our growth of GDP growth is at around 6.5%. Not me saying it, is IMF saying. So this kind of and there is nobody in the 6% basket in the whole world today. So these are numbers that are very strong to not look at India in the longer run. But having said that, tarnishing does happen. But I think, I can tell you that, and I don't even say that anybody is not right in this. I think if they get the story right, maybe they have the story and they've not been able to display the story. If they get the story right, and they'll move back. So that's how it is. It is a question of just displaying that.
Okay, we got this particular statement by Mr. Shyam Sundar. He says, cold storage, I suppose it's about balancing success rate at the cost of giving up some % of returns. I don't think there will be any sure-shot process to catch stocks at their lows all the time.
Yeah, there won't be. It is a question of, actually what you're putting it is quite right. It is a question of being a little more conservative and having a little bit more maturity in the system, so that you're not, and giving the final verdict to the market to say that market knows it better. And so, for example, I may pick up a company which has delivered great returns, right? I may pick up a company which has given great results. Everything is right about the company, but the market is not rewarding that company for whatever reasons, right? So now that for whatever reasons is where we say bhav mein bhagwan, right? We always say that in the equity markets, that the price is the god of everything. If the market is telling you something different, all that you're doing is you're just holding it. You're not investing in that company. You are investing in that company. You're saying that I'm just going to watch it peacefully. It's like you get an opportunity, you say, okay, let me just ponder on it. Let me just hold on to it and see how this opportunity looks. Maybe I was doing it in day one, maybe I'll do it after 5 days. So if the trend is positive in 3 days, why will I wait for 15 days? Right? We will come out with it in 3 days, 4 days time. So it's not that we will put everything in a cold storage and not open that cold storage for 10 days, 15 days. That's not what I'm saying. If there are positive trends that are emerging in 3 days time, it will come out in 3 days time. If there are negative trends emerging, then the story continues for 10 days or 15 days or for 1 month. But all that I'm doing out here is reducing the chance of capital erosion versus having the pleasure of saying, I am announcing the stock as the Mojo stock as number one. What is the point? वो announcement में जब पैसा ही नहीं बनने वाला है तो क्या फायदा उसका? So you may as well take your time and you may as well be sure about the stock and then announce it and then, reap the benefit, and then you're saying that I have announced it, now I have looked at the trend and I have announced it. So please understand that what is success in equity markets? The reason I am today telling you what is success in equity markets is because most of the guys get it wrong. Most of the guys would typically look at 10 stocks and say that इसमें से मेरे को 2 या 4 multi-bagger मिल जाएंगे तो बहुत बढ़िया है. Right? 2 or 4 multi-baggers I'll get, that is great. That is not success. That is catching a multi-bagger. Right? That's a multi-bagger catch story. What is success is that if you have 10 stocks, how many of these stocks end up giving you consistently positive returns? This is the success mantra of equity markets. This is the success mantra of private equity markets. That if I do investment, how many of these companies are going to make money for me? Whether it is 6 or 7 or 8 or 9 or 5 or 10. Right? As soon as you get into that philosophy that I can't see a red on an overall gain loss basis, I can't see a red when I'm looking at it, I need to take an action. I am fine to see a green, even a single digit green, even a double digit green. I'm fine. But I need to be very disciplined to accept a red in my particular choice. That if you keep eroding that particular reds from the portfolio and keep maintaining a decent portfolio with the greens out there, that is the chance of success. So it is not, your return will always be way higher by having average to good return companies which are more number in your portfolio than having two multi-baggers in your portfolio and the rest of the portfolio bleeding. Always. Because us story mein, in where you have two multi-baggers, your allocation has to be right there. You have to make sure that your timing is right out here. If you have another two stocks where your allocation is higher and they are negative, it's going to take your multi-bagger approach completely down. So you have to have a lot of luck factor that in those two stocks only I had invested my most of the money, the remaining were hardly anything. That never happens. In a equal allocation where you say, I don't know what is going to do well over a period of time, the only way to succeed is to keep making sure that the greens in your portfolio are at least 7 to 8. And that is the consistent effort that will reward money.
Okay, Mr. Tito has asked this question. He's asked any updates on the planned buy-sell feature on the platform. Not sure if he's referring to mutual funds or stocks.
Sorry, planned buy-sell feature on the platform. Sorry, I didn't understand.
I think he's talking about the transactions features.
Buy-sell feature on the platform. Okay, so why don't you wait for next Friday?
Okay. Moving on, this particular statement by Jadhav, hats off to the MarketsMojo team regarding Adani shares. Advice to stay away from starting you protected savings. Thanks, Mohit, Sunil and the Mojo team.
Thank you. Thank you so much.
Yeah. Sandeep has said, hi Mohit, could you reflect on the fact that stock of the month has not performed well recently? The success has been bad.
Yeah, so I think give it some more time. We keep reviewing our stock of the month. If it is not a closed stock of the month, we still have a lot of hope on it. So these are very carefully chosen stocks and very conservative stocks that we choose. These are not the rocket stories. Stock of the month is for very consistent long-term investors. So just don't worry about it. We're watching it.
Okay, moving to this next particular question. This is by Kirit Kumar. He says, my model portfolio is currently doing well, but there are more and more Mojo stocks which keeps coming. What should be my strategy here?
I think your strategy, Mr. Kumar, should be to keep allocating to model portfolio. Trust me, that is the only way. As I told you, that discipline is only there that comes. So most of the time, I'll tell you, 70 to 80% of the time of my day goes towards improving portfolio performances. And I cannot improve that unless it's like stocks are for me gravy, and this is where the actual dish comes out, right? So there's a lot that is there from creating a gravy to the actual dish, which is the model portfolio and the infinity portfolio. So we improve the gravy and then we improve the parameters. There are lots of parameters that you can't even think of when you do individual stock selection that you will be able to apply, not even think of. I can name today close to 70 to 78 parameters that we apply on portfolio selection, right? That is something which is impossible for anybody to apply on a day-to-day basis when they are buying individual stocks. So I would always suggest that take a portfolio approach. If your portfolio is doing great, doing good, superb. If it is not doing good, I would still tell you to allocate there. So it is not that I would change my story for a positive portfolio or a negative portfolio.
Okay, George has said that, are you by any chance compromising the portfolio performance by reducing the portfolio churn? If so, I'm okay with the high portfolio churn to have an overall better sold portfolio performance.
Yeah, so see, we are doing that, George. We always look at the overall churn that we do, and primarily I'll tell you why we're doing that. Our churn has been a little high, and I've been consciously holding the churn back. I typically am in a favor of churn closer to 1 or 1.2 x in a year, not more than that, because when we go for the PMS license, it can be deemed as trading income otherwise. The regulators, the tax authorities take it as trading income. So we are trying to come out with a system where the churn is as low as possible. Having said that, now obviously the whole context of paying tax is when you make money. So if you look at what we are trying to do aggressively is that we are going very aggressive on loss booking and we are going easy on profit booking. The reason we are doing that is that even if the churn is higher, your eventual tax incidence is lower at the end of the year because you can carry forward the loss and you are weeding out the non-performers out there. So us selling in loss doesn't bother me on churn. Selling in loss doesn't bother me on churn because you're not going to get into a tax bracket out there because it's negative returns out there. So what we are doing is that we are trying to keep the churn reasonable, but we're trying to at the same time trying to keep the churn a little higher on the sell calls, so that even if I end up in a larger churn, in volatile markets you don't have an incidence of tax out there. And obviously, good companies going up, there's no point churning those companies. But that's the overall philosophy that we're following.
Okay, question by Prakash. Can we equate the cold storage approach as human emotion interference?
No, it is not, because the trend analysis will happen from the system only. It is not something that we are going to watch with our naked eyes and see what is happening. It is something that we will be deploying it through the system only. So the system understands the trend, and it's a very easy. It's not a rocket science of a trend that you analyze of a stock in 7 to 8 days. I just give you an example. Most of the Adani companies were in the bullish range even after the first day of crack. Right, so if you purely look at any factor in isolation, you can get very confused. You will say that, "Arey, ye kaise ho gaya?" When the Adani group fell the first day, which was around 20-25%, it was still mildly bullish. Mildly bullish at a 25% fall. It turned into flat, sideways, and then I think after 40% erosion of capital, it came into a it is still today mildly bearish as per 7 parameters. Right, so all that you're doing is that you're basically saying that I am putting a trend catcher. If the trend is out, and that trend is not a manual, it's a algo trend that you're putting out there, and if the trend catcher says wait for some time, or now it's a green, let it go, that's how we're going to do it. But nothing is manual in our system for that matter, apart from certain cases where we feel we have serious doubt on corporate governance. That's where we go all out, and we take a manual call, and we tell you also out there. But there's no corporate governance out here. There is only trying to figure out that is the market telling you anything more than what you already know? Wait for it, understand that, and implement. That's all.
Okay, Yuvarajan has said that a particular stock, Bombay Super Hybrid Seeds, delivered 1,473 returns in the last 5 years, and very surprised that none of us have noticed this type of stock in MarketsMojo.
So my system would have not picked up Mr. Yuvarajan, and there may be ample stories that have delivered similar returns, little lower or maybe higher returns. Returns is not the only factor that we look at. There are counters. Typically in bullish markets that are crazy returns for no rhyme or reason. I mean, we could have said the same thing 10 days back for Adani that why didn't you guys catch Adani, and Adani is given so much return. But I can't comment on these companies. The system is what it decides, and sooner or later, if the quality parameters get checked on this company, it will come in. If it doesn't, we lose the opportunity.
Okay, so moving on to this next particular stock, I think few of the investors have asked this particular question. A few weeks back, you were bullish on the IT and pharma sector. Do you still hold your belief straight?
Absolutely. IT, pharma, capital goods, infra. And I think if you look at the whole budget story, it is on IT, it is on infra, it's on capital goods, and it's on tourism. Right, so travel and tourism. So there's only one thing that has got added with the budget out there, which is travel and tourism. But I maintain the same call. Pharma, there was nothing on the budget. But I think pharma domestic companies are doing very well, and you will start seeing that in the price. But we had taken a call and we told you the bullish sectors, manual call again, that we personally feel is IT, pharma, capital goods, infra, and defense. These are the 5 places, and apart from pharma, 4 of them have been extensively covered in the budget. Defense has been covered, IT has been covered, infra has been covered. So all of these have been covered very well in the budget, and we still, in fact, I hold a stronger bullishness on these sectors.
Okay, Vijay says, just in, government plans to convert Vodafone Idea's interest dues of 16,000 crores into equity. Mohit, do you have any view on this?
Vijay, it is a strong sell in my system, and I have my views, but these are personal views. So if you want to know my personal views, you'll have to come to the office.
Okay. Moving on to this next particular question. This is by Chaitanya. You are not booking profit or partial profit if the share goes up by 25% because you think the stock will go up further and become a multi-bagger. But only 1 out of 50 stocks get multi-baggers. So don't you think it's wise to book that profit at 25% rise?
No, Chaitanya, 25% there is, multi-bagger is not over 25%. Multi-bagger is over 100% at least. Multi-bagger. It has to give you a 3-digit return. Right. For us, 25% is not a marker because most of the companies typically shine at much higher. So our profit booking has already started, as you know, and our profit booking is not at 25%. It is at a level a little higher than that, but it is not at a multi-bagger event. What we are also doing and what we have also implemented is stop buying. When to stop buying in other portfolios. So for example, I bought a stock at 100. It became, say, 150. You bought that stock, I recommended you to buy that stock at 150. It went up to 160. And then we said, get out. So you got a 10% return, I got a 60% return, right? So what we've also implemented in the system is when to stop buying. If a stock has already moved up 50, 60, 70%, then I will hold on. I will not tell the other investor to buy. I will give him another stock which has a similar story, rather than reducing the chances of that particular one. So 25% is not a threshold where we feel the optimum return for the portfolios can be generating. It is a number, but it is quite higher than 25, but it is lower than 100%. Multi-baggers start over 100%.
Okay, Payal has asked this question a number of times. She says that if the past score is helpful with the entry of exits, why don't we apply them to model portfolios? I think it will help investors as well.
Yeah, we are applying it to all the portfolios. So it's a score that we do not display on the site because of, the reasons Payal out there, but it is not something that we are putting it up large out there for all the stocks on the site, but we are applying it to across all our portfolios.
Okay, Mr. Mohit, that's it with the Q&A session for today.
All right, thank you so much and happy to see you and meet you and speak with you again. We look forward to continued interactions with you and we will see you soon. Thank you so much.
Yeah, thanks a lot everyone for attending today's event. Tomorrow I'll be in front of you at around 6:30 p.m. SEBI has recently come out with a report on how trading and how trading can be harmful, and I'll be looking forward to sharing some insights with you all. Goodbye and have a great weekend. Thank you so much.